Welcome to this video on the power struggle over the Fed and its consequences. For the coming year, we now expect 3 more US rate cuts than previously anticipated. The Fed will likely lower the upper limit of the interest rate target range not only to 3.75% but to 3.0%. We have always assumed that Donald Trump would push the Fed towards a loose monetary policy and that the Fed would partially yield to this pressure. But now Trump's pushing has reached a new quality. He recently called Fed Chairman Jerome Powell a stupid man. Trump also accused him of wasting public funds on the renovation of the Washington Fed buildings, which could be constructed as grounds for dismissal. Furthermore, among the often mentioned successors to Powell, who is scheduled to regularly leave office next May, are 2 men loyal to Trump. Overall, the likelihood has increased that Powell's successor will pursue a very loose monetary policy in line with Trump's wishes. This reminds me of the 70s. At that time, US President Richard Nixon put immense pressure on Fed Chairman Arthur Burns. Subsequently, the Fed followed a much too loose monetary policy over many years, which significantly contributed to the high inflation of the 70s. We do not yet know how strongly Powell's successor will submit to Trump's will, but the direction is nonetheless clear. The independence of the US Federal Reserve is likely to erode during Trump's second term. This increases the long-term inflation risks. Also, market participants have yet to price this in. All this suggests that the US dollar will tend to depreciate further in the coming months.